Hello everyone, this is Jay, and in today's video I wanted to review an SCHD holding that just increased their dividend, and also an ETF that I actually like very much and I own in my Roth IRA. But before we start, please don't forget to hit that like button so you can continue to help me reach others with the YouTube algorithm. And thank you so much to everyone for the support and the comments that they have always been putting in there. I really like talking to you guys and replying back to your comments as I do personally. So let's go. All right, so let's go to the updates tab, and right here it is ticker symbol LMT for Lockheed Martin. They increased their dividend by 5%, and this happened on October 7th. They just shared this. So it declares at $3.15 per share of a quarter on their quarterly distribution. That's a 5% increase from prior dividend of $3. The forward yield right now is at 3.14%. So it's definitely looking really good. And especially it was on a dip. Well, it is actually on a dip right now. If we go to Seeking Alpha, I'm not affiliated, but this is the website that I usually use to research my stocks and ETFs. So Lockheed Martin Corporation, ticker symbol LMT, it is down in the past 6 months 12.12%. But if you guys see right here, it looks like when I looked at it this weekend, I was looking into it on Saturday actually, so I can make the video, and it looks like it definitely went on an uprise. So it is now up 8.93% from Friday. It went up on Friday. It was, I'll tell you guys right now, on Friday at the end of the day, it was at $401 per share, and out of nowhere it went up to $436 per share. I'm sure it was the dividend increase announcement for sure. So as you guys can see here, that dividend yield right now at the price that it's at is 2.99%. If you would have picked it up on Friday, you would have had that 3-point-something% yield. So that dividend, that PE is still low. It's still at 14.78. And this company has a market cap of $100.92 billion. And some of the news also that have been coming up with Lockheed Martin is that they receive a couple contracts, like this one for $1.2 billion missile contract from the U.S. Navy. And then they secure a $188.02 million Navy contract modification. As you guys can see here, they just continue to get some new contracts. So you guys can take a look at the news and look into it. Lockheed Martin, you know what? Let's read a little bit about the company right here. So Lockheed Martin Corporation, a security and aerospace company, engages in the research, design, development, manufacture, integration and sustainment of technology system products and services worldwide. So pretty much they operate in 4 segments, which is aeronautics, missiles and fire control, rotary and mission systems, and space. So they make all these type of weapons, I guess, and so many things for any military and airspace. All right, as you guys, let's go back down to the market cap again, $100 billion. The total debt is at $17 billion, but and in cash they have $3.67 billion. So, but as you guys can see here, that dividend yield right now is at 2.99%. The annual payout is $12.60 per share. The payout ratio is 42%, and the 5-year growth CAGR 8.45%, which is looking very good. Years of growth, of course, 20 years, And this one hasn't been updated yet. It's still showing the dividend of $3, and it should be $3.15. So as you guys can see here, that dividend growth history definitely is looking really, really good. This is the total in a year per share that you will be making. As you guys can see in the screen, from 2018, it went up from $8.20 to $9 to $9.80 to $10.60 to $11.40. So it's definitely been growing like 80 cents every year for each share. So this is definitely one company that you should do your research. I'm not a financial advisor, of course, but this one is looking really, really good. It is a company that has been paying dividends for many, many years, and it doesn't look like it's going to go away anytime soon. Right, let's go back to my updates. And before I go to my next update, which it will be to review one of my favorite ETFs, I just wanted to give it a shout out to all you guys that have been in my comments in the past couple of videos, and I really, really appreciate the support. And some of the subscribers are I apologize if I pronounce any of your names wrong, but I have an accent. So Mark Cleve Kowitz, Bryce at Apex, not sure if he's an Apex Legends fan, but nothing against that game. I actually like that game. So Steven Atkinson, of course, is one that has been commenting a lot. A-Bone, and I do want to give a shout out to Entrepreneur Investor, which I watch his videos. He commented in one of my videos. I do like his videos. Keeps me very entertained. Another one is P underscore Splint, Kenny 8895, and of course two of my subscribers that have been very, very active with me, which are Maytech and Randy. They know who they are. So definitely appreciate all you guys' support. So let's go back to my updates. So let's scroll down a little bit, and that dividend growth ETF is DGRO, which is an iShares Core Dividend Growth ETF. This one is by BlackRock. So if we go to the BlackRock website, which I have it right here, let's take a look at the DGRO. It has an expense ratio of 0.08%. So every $10,000, you pretty much only pay $8 a year for every $10,000 that you have invested. So it's definitely something that is an ETF that is very, very low in cost. So why DGRO? DGRO offers low cost exposure to U.S. stocks, focus on dividend growth, access companies that have history of sustainable dividend growth, and that are broadly diversified across industries, used at the core of your portfolio to seek income. So it's definitely one of the ones that I have as my core holding in my Roth IRA. It is one that I am going to be using those dividends, hopefully when I retire. That's what I'm really, really hoping for. So as you guys can see here, that total return is definitely looking really good right here in the performance. So in the 5 years, 8% return, 3 years, 10%, 1 year, 14.39%. So it is definitely looking really, really good. Let's go take a look down. Let's take a look and see if they have right here in their website their holdings, because that's something that I really, really like. As you guys can see here, they have 430 holdings. So it is definitely very, very diversified. It is one of my favorite ones. I really, really like it since I started my Roth IRA. And let me take a look. It should be somewhere down here. Management fees 0.08. Oh, and here it is, their holdings. So their top 10 holdings are Microsoft, MSFT, which all you guys know about them. JP Morgan Chase is pretty much like a top 2, top 3 bank in the United States. Apple, of course, that's another one. Johnson & Johnson, ticker symbol J&J. So I own these two in my regular taxable as individual companies, and I own them in my Roth IRA. ExxonMobil, AbbVie, which is a healthcare also, Chevron, Pfizer, Procter and Gamble, which is one of my favorite ones, also is one of my holdings, and Pfizer too, that I just started a position on there. They're paying a very, very nice dividend right now. And United Healthcare, UNH. So if you go to their website, to iShares website, you could go into the holdings side, and you can definitely continue looking at all the holdings that they have. As you guys can see in the next one, Home Depot, Broadcom, Merck, Coca-Cola, PepsiCo. I definitely own Coca-Cola everywhere, pretty much, in my SCHD, DGRO, and as an individual holding. Bank of America, also Cisco, Amgen. We can definitely go on and on and on, as there's 44 pages of this. So just do your research. This is definitely one that I really, really like. And if you see the exposure breakdowns right here, they invest 19% in healthcare, 18% in financials, 15% in information technology. That's why they do very good in price appreciation, which I'm going to show in Seeking Alpha in just a second. Consumer staples is 10%, energy 6.93%, utilities 6.56%, consumer discretionary 5%, materials 2%, communication 1%, and cash and something else 0.37%. So this is definitely one that I really, really like. Last week it was down, so let's go ahead and take a look. Let's take a look at year to date. It is down almost 1%. So it's not even down by that much. But if you take a look, let's take a look in the last month. It's down 4.28%. So you can definitely pick it up at a cheaper price than it was a month ago. So this is definitely one that I like. Let's take a look at that. Dividend yield is 2.60%, and it shows right here. And in the 52-week range, it is more towards the high than the lows. But it's definitely looking really, really good. And then, of course, let's check the assets under management, which is $22.63 billion. This is one that I definitely like. And if you guys can see here, that price return, that price appreciation is very, very good. If you guys see here, in the 1 year, 6% you get in return, just with the price. I'm not talking about the total appreciation with the dividends reinvested. 22% in the 3-year return, just price alone. And in the 5-year, 32.76%. So that's definitely looking really, really good. And if you guys see a total return with the dividends, is for the 1 year is 9% return, 3-year 31% return, and 5-year 49% return. So this is definitely looking really, really good. And if you guys see that dividend yield 2.67, annual payout is $1.27 per share, and the 5-year CAGR is 9.66%. Years of growth 8 years, and the ex-dividend date, I just got paid from it in my Roth IRA. They just paid on October 2nd. So as you guys can see right here, this continues to grow every year. In 2018, they pay 81 cents per share. 2019, 93 cents per share. 2020, $1.03. 2021, $1.07, and 2022, $1.17. So definitely do your research in this nice ETF, and I like it very, very much. I really wanted to review it very quickly since it's one of my favorites, and I want to take a look at my portfolio today, how it's doing. and it is still down. But remember, in the last video that I posted, I was down over $600, and now I am down under $600. So that's why you don't panic. If it goes in the red, the portfolio, it's okay. As long as you chose companies that you like, that you know they're going to be doing very, very good, and that are very, very good companies. As long as you hold them, even if they go down in a day or just in a month, most likely they will go back up, as long as they have very good valuation still and they are great companies. All right, everyone, I hope you like this video, and please don't forget to hit that like button and subscribe so you can join me in my journey of growing my dividend portfolio. I am at $8,000 in market value in my dividend portfolio. So please don't forget to join, hit that like button, and let me know your opinions in the comment sections. Do you own any of these two? Do you own DGRO? Do you own Lockheed Martin? Please let me know. And have a great day, everyone. Thank you. Disclaimer: I am not a financial advisor, and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.